Hello friends, this is the Cryptonian taking a look at Bitcoin, BTC on the daily chart. This is going to be a little bit more in-depth analysis for those of you that have seen some of my past videos. You've been with me for a while. I do like to take a look at Wyckoff analysis on Bitcoin because Bitcoin is an institutional instrument. And so, the institutions, they play by different rules, and what they like to do is they like to utilize Wyckoff accumulation, distribution, and markup methods in the market because it has a tendency to confuse. It's very effective. It's been effective for 100 years, I think. I think it's been 100 years, maybe, or a little bit less, or a little bit more. Not really sure. I don't remember, but Wyckoff was very successful, and they use this method in institutional trading to accumulate and to basically ensure that they will be successful and profitable in the market. So you can look more into that a little bit later. Maybe I'll make a video about that. But there's one thing that I want to bring your attention to on the daily chart. Let me get out my trusty brush here. So here we have the chart here, and I want you to notice a few things. Excuse me. The structure of a Wyckoff accumulation zone starts with the selling climax, which is that big wick down. You have an automatic rally up, and then you have some supply tests along the bottom, and then you have a creek, and then you have the spring. Okay, those are the basic points. Along the way, you're going to have wicks down, and these are what is called supply tests, right? That's the institutions testing the supply, whether or not it's ready to move up. Okay, so here you can see the selling climax, and you can see a lot of selling there. Okay, now the institutions, they hide their buying in that red candlestick, so you don't even know that they're buying. But because of the wick way up here, you know that they purchased a lot. Okay, so when we take a look, I don't want to get into too much detail with Wyckoff. I don't want to get sidetracked, but suffice it to say that we do have some similarities between what we have now and what we've had this past summer. This past summer was about 2.5 months, 3 months maybe, something like that. And when we take a look at this area here, it's very similar. Now the angle is different, right? This was more sideways action, right? And this is more of a severe downward action, right? The angle is down. But we have the same characteristics. We have a selling climax here, and we see here that we have a spike in volume. But notice this spike in volume is so much higher than this spike in volume. Okay, look at that. And then we had subsequent spikes, supply tests, right? We had a supply test here, and you can see the volume here, right? And then over here, we didn't really have some severe supply tests, and I'll tell you why. Because look at the volume, so low. Look at the volume, very low on the daily, right? Compared to this area, we have just had a descending volume here. Now, why is this important? Why am I telling you this? Well, this is important because what I'd like to propose to you, what I'd like to submit to you, is the fact that I do believe that we are in a massive accumulation zone, right? And that will explain why we've had such controlled movements like this, right? Now, why would they do that? Well, here's the reason. You know, if they want to accumulate, they keep it within a zone, right? And so you go from the selling climax to the automatic rally, and between those 2 points, that is your accumulation zone. And then you buy at the bottom and you keep it within that range, right? They kept it within the range from these highs down to the lows. They bought at the bottom, they sold at the top, and they build their position that way. And the whole goal, the whole objective of an accumulation zone is to demoralize retail, to fake them out and get them to sell, and to frustrate them, right? And to basically accumulate Bitcoin, accumulate the asset that they're trading. Okay, so what happens is in these lower levels you have traders, right? And basically these institutions, what they'll do, and whales as well, they'll buy down here, and then they will allow traders to run it up, and then they'll sell for profit here, and then they'll pound it down, right? And then they'll buy down here, move it, allow traders to move it up and pound it down, right? And so it's buying low, selling high within a range. They create a position. Now, if that's the case, why don't they just continue to allow it to do this for a long time and then push it up? Well, they did that in the past. Now remember, in the past, Bitcoin has had cycles of where it was in a bear trend for 3 years, right? Now, why would Bitcoin have to be in a downtrend for 3 years or in extended periods of consolidation? Well, in the past, it's because of a few things, right? Volatility was really high in the past, and retail, it was primarily retail. You know, we didn't have institutions in the market with Bitcoin. It was just primarily retail. And what would happen is you'd have these huge euphoric rises, and then there would be huge dumps. Retail would get destroyed, and because there's no institution participation, you'd have these long periods where retail would get frustrated, their bank account or their Bitcoin accounts would get destroyed, and they would walk away, right? And then they would come back later, 6 months, 8 months, try it again, whatever. And this whole cycle of fleece, retail banging itself over the head, trying to out trade each other, that was the past for Bitcoin. Now we have institutions in, and they have the amount of money, they have the amount of buying power and selling power to be able to hold Bitcoin within price ranges. Now, that being said, look at what we have here. We have a selling climax here. We have an automatic rally. All right. And you see that the price didn't go above that automatic rally. The automatic rally is the range in which it trades, right? And then you see here we went down below it and we had buying and we pushed back up, right? So what I'd like to say is that this looks like a Wyckoff accumulation zone, and if this is a Wyckoff accumulation zone, then we can expect similar, not exactly the same, but similar price action as what we see here, right? A controlled range, right? So that's what I think what we're seeing here. Selling climax, automatic rally, coming back down, and then pushing back up, heavy selling at the top, coming down, buying at the bottom, allowing it to go back up. Now we're testing it again, right? Look at the volumes. When we had a selling event, a supply test, there was a lot of volume. We're not seeing a lot of volume down here. People are not selling. Look at this. And that's the reason for the prolonged period of keeping it low, right? They're trying to frustrate and pretty much bore people out of the market. Why? Well, what happens is the Bitcoin supply is limited. And so because the Bitcoin supply is limited, no one wants to sell when we get down to this point, right? They just say, well, I've taken a hit, I'm just going to hang on to it. Everyone that would have sold or is willing to sell has sold by this point, right? So what they have to do is allow it to go up and then bring it back down, all right, pound it back down and get people to sell again. So the only way that they can get Bitcoin is through severe swings in the market, right? Why? Well, the reason is because no one wants to sell down here, right? So if nobody wants to sell, you have to allow the price to go higher, and then they're willing to sell, and you accumulate on the way, and then you dump here, bring it down, and you accumulate more, right? You scare them out of the market at certain levels and get them to sell, and that's when you accumulate. Now look, we're right back at this point here. This is the top of the previous accumulation zone, okay? So it doesn't really make sense for us to go below this, right? So in my opinion, I think we're probably going to, maybe we might have a supply test down below to the 39 or 40 area, but I do believe that we're going to be pushing back up here. Now, when you take a look at the Wyckoff Zone, you'll see the price action comes to a point where it just trickles down like this. See this? Very, very low volatility, compressed price range, restricted price range, until it hits this zone down here, the buying zone. And look at your sell volume, very, very low. This shows that all of the supply has been absorbed, right? All of the supply is absorbed, and then that's when the institutions know, hey, let's push it up higher, okay? And no one will have enough volume to sell and oppose us. So the idea is that they're going to accumulate all they can, so there are no sellers left. So it takes a very small amount of capital investment to push it higher, right? So what they want to do is they want to accumulate a lot here with the ability to only use a small amount of investment, added investment, to push it higher, right? If there's a lot of sellers, a lot of whales or sellers at these levels, it's inefficient. It's going to require the institutions to use a lot of money to push through that, to buy up that supply just to go higher for a profit. So what they do is they accumulate everything down here, and they pay attention to the volume when it's really low, and then they know all of the volume has been purchased. Look at this. You see the sell volume is high here. Let me move this out of the way. Sorry about that. The sell volume is a little bit lower here, but then it spikes up again, okay? So they know that there's more people willing to sell here, okay? And then they had another supply test. They pushed it down, and look at no selling at all. They have absorbed the supply, and so now it's time to push it up, make a profit, and then send it back down again. Now everyone was calling 100,000 when we were pushing up through this area, right? But the institution said, no, we're going to control the rise, we're going to control the top here, and we're going to bring it back down again. And they went into more accumulation, right? And the only way to get Bitcoin out of the hands of retail is to allow the price to go up where retail is willing to sell, all right? And then that's when you cause them to sell by dumping it a little bit, and then the retail sells, and you buy it up, right? You accumulate it, and then the more that you take off of the market, the easier it is to manipulate it, because there's a smaller amount of free supply. And so what happens then is that, look at this, you had a spike here, you had a spike here, you had a mini accumulation zone right here, right? And so you had a spike here, right here, but it was about the same or a little bit lower than what they had in the past. So although they're accumulating more, it's a little bit more expensive to accumulate. They don't care because they know that in the long term, it's a limited asset. There's only a certain amount, and it's going to go much higher in the future, right? So look at they had more selling from retail here. They absorbed that supply, and then less selling. They absorbed that supply, and then by the time we are down to the last point here, look at this. Look at this. Much lower supply. People are not selling. So they said, okay, we have absorbed the amount of supply that retail is willing to sell, and now it's time to go higher. They push it up higher, and they're making profit all of this time, right? And then retail is willing to sell here. Well, they don't, and they're willing to buy there as well, right? So there's euphoria, a lot of retail coming in thinking we're going to 100,000, and they start selling for a profit, offloading everything that they've accumulated in these lower areas, right? They're selling because remember, down here you buy and then you sell at the top of the zone. And they're treating this entire area right here, this entire area, they sold and took profit here, accumulated down here, sold, accumulated, sold. Now we're back to the accumulation zone again. This accumulation zone is just above where we were before, right? So essentially what they've done is they've just made tremendous profit, and now they're reinvesting it right here, which is right at the top of this zone. It's genius. It's genius. And so this is what I think is going to happen. I don't think we're going to go much lower. I don't think we're going to go much lower here. A lot of people are calling for, stupid prices like 20,000 or 30,000, something like that. I don't think we're going to get to that point. If we get to those levels, suddenly everything that the institutions have accumulated here and here suddenly becomes negative. It becomes a loss. And I'm talking about millions of dollars of losses, right? So what they're doing is they're controlling it to keep it within this area, right? Within this area, so they can make a profit. But I don't think they want to go this low down to the 30s because, again, that means that there's no profit there. That means that suddenly everything that they've accumulated down here is now a liability. They're breaking even, and it starts to become a liability because they also accumulated up here. And now whatever they accumulated up here is negative, and it's just not good business, right? And so they have to show that as a loss on their accounting, right? So what do I think is going to happen? Well, let's take a look at the volumes. Here we had a nice volume spike on this selling climax here, right? And then we had a automatic rally here, and then we had a test. We didn't make it past the accumulation zone, the upper resistance, and we came right back down to support. Now what I think is going to happen is look at through here, there was no major selling. No major selling. Even when we came down to this point here, even when we came down to 39,000, there was less selling than when we came down to this price point here, the selling climax. So what does that mean? We had more selling at 42,000 than we do at 39,000. You see that? And we have in this zone, okay, recently, in the past few weeks, we've had very little selling. See this? Very little selling. You can take a line and you can draw it across the top of the volume bars, and you can see where the excessive selling was, right? It was here. Here's your excessive selling. It was here. Here's your excessive selling. And then look. And then, but look at, we also had a lot of buying right here. This is where a lot of the institutions were purchasing, and they were purchasing here, okay? And the whales. Then we had a lot of purchasing here, and we had less buying here, but we had a major increase in price. Why? Because all of the supply was absorbed by the institutions here and the whales. Okay, that's the game that they play. And then we had another another selling climax here, and look at, we have less selling here, right? And then we had another supply test, severe supply test, less selling here, less. It's getting less and less. They realized, look, people don't want to sell at these prices, let's push it higher. Okay, they pushed it higher, and people were selling, they're accumulating along the way, and then they dump it for a profit, knowing that they're going to buy it back down here, because ultimately they're buying all this way and dumping up here to push the price all the way down, right? They want it back down to where they their price point is. All right, so here, when we had this selling, this dump, huge amount of selling here. All right, it was only when we got to this point between there and here that retail was afraid and they sold. You can see a selling spike there. Now look, we even dropped lower, and there's almost no excessive selling. So the supply is being absorbed again, all right, and they know that they're going to have to push the price higher, right, to get retail to sell again, right? And not only that, but there's no volume out there that can oppose them to keep the price low, right? So there's no large sellers, there's no large bears, right, in their way. They've severely tested it here, severely tested it here, and we're getting less and less Bitcoin on the market. This shows that the Bitcoin is being taken off the market. People are holding it. They don't want to sell. So if they want more Bitcoin, they're going to have to raise the price, and that will be attractive for retail to sell. Okay, so that's how the game is played. I think, in short, I've said all of this so you understand the psychology of volume and price action, and how they use these zones, Wyckoff, what's called Wyckoff accumulation zones, right, to accumulate Bitcoin and manipulate price and take the Bitcoin from retail. Now, that being said, let's take a look at something else that's similar. Something else that's very similar is not only the things that I've shown you, the selling climax, the automatic rally, but look at the fractal. The fractal is very similar. If you take the price action and you overlay it to where we are now, it's very similar. Very, very similar. Time frame is a little bit different, but you can take the fractal and you can overlay it a little bit, and you can see that it's very similar, right? The only thing that's missing is here. Let me show you here. Is here we had a rally, and then we had what's called the creek. It's very low volume, very restricted price range, right? And it's basically low volatility. And then right at that point, when it gets back down to the accumulation zone support, they send it up higher. And then what you have here is what's called the LPS, last point of support. It goes up to the price goes up to the resistance zone, pulls back, but then it stays right under the zone. And in this case, it was right at the 200 daily moving average, right? So, and then after that, they send it higher. Okay, send it higher. So if the same thing is going to play out, something similar, not exactly the same, they don't want to repeat exactly the same because then retail will see what's going on. That's why I believe they've pushed it down here lower, and it doesn't look exactly the same as what we've had in the past, this blue fractal. But if we are going to repeat something similar, you can see here we had a rally, and then we need the creek, this little area where everybody gets bored and frustrated and they get out of the market, right? And we don't have that yet. What we do have is this supply test down here to 39, and then now we're coming back in that range again, all right? Just like we did here, came down, went up, came down, and then we popped up higher. So one of two things will happen, in my opinion. It's either going to look like this, or it's going to look more like this, right? And I tend to think that it will look a little bit more like this down here. Okay, so what does that mean? I would expect us to have some kind of a rally, probably up to 45.9, this Fibonacci level here, or maybe up a little bit higher to this 30-day moving average. Actually, by the time we get up to that level, depending on how fast we get up to that level, we'll hit the 30-day moving average anyway. And then probably what we'll do is we'll go into this low volatility tight price range called the creek until we get down to probably 41, 42 again, and then we'll shoot up with a lot of strength, probably 10K. Let's see, we went from here, which was 29K, all the way up to the top of the zone, which was 42K. So that's what, 13, 12, 13K in a matter of 1, 2, 3, 4, 5, 6, 7. And in about a week, we went about 10 to 12K. All right, 11, 12K. So I would expect the same thing here, right? I think we're going to go up, come back down a little bit. Everybody will be bored, and then, you know, altcoins will do their thing, and then Bitcoin will then explode higher. You know, 10K in a week, something like that. It'll go straight up. It'll after the creek, it'll go straight up. We'll hit upper resistance at about 51, 52, and then we'll come below that, find support probably at this time around the 200 daily moving average, and then we'll go right up from there, break through the upper resistance Wyckoff zone, and then it's called the backup phase, right? Once you consolidate a little bit under the resistance area and you break it. Once you break it, then this is called the backup phase, back up, right? Now in reality, we should have gone much higher. When we broke out of here, we should have continued going up high like this, right? Just continued the upward trend. But that didn't happen. What happened was we went up only to this point, which was 52, and then they brought us back down again with a lot of selling, right? Why? Because they want to control the price action. Why? Because they don't want the price to get too high, because they want to buy more. They're controlling this. It's an accumulation strategy. They've accumulated here. They made a profit here so they could accumulate more here, and then they sold here, all of it. They dumped on everyone to bring it back, not all of it, a large portion of it, and probably used a lot of short selling on credit to bring the price back down. And now they're just accumulating again down here. So there you have it, friends. When we take a look at what happens in Wyckoff accumulation zones, and when we take a look at what happened over here, we take this fractal here, this blue price action bars, and we overlay it in this area. We can see it's very similar price action. It's not going to be exactly the same. It's not. Actually, what we're seeing here in this area is a mixture of two zones. All right, it's a mixture of this price action in that zone with this price action in this zone, and so that's what we're seeing here. But I have no doubt in my mind that we are in an accumulation, Wyckoff accumulation zone here. Okay, so we are now down at the bottom of this accumulation zone, but look, there's not a lot of selling. Volume has dried up, and that is a signal that we could be going higher. Probably 46, 47 in the short term, and then maybe a little trickle down having the creek. That's actually in the Wyckoff method. In the Wyckoff method, this is called the creek. Low volatility, tight price range, and then boom, that's when you know it's ready to go higher, right? And so that's what I'm expecting here. I'm expecting a push to 46, 47, and then the creek down to about 42, 41.5, maybe even 41, and then boom, we're going to go higher. All right. Once we go higher, expect resistance and a pullback at 51, 52 with a little bit of support on the 200 daily moving average here, or just above it, and then much higher. There you go, friends. This is my Wyckoff analysis of Bitcoin, and this is kind of what I'm thinking is going to happen. You know, this is not set in stone, of course. There can be some variations. I'm not a financial investor. Excuse me, I'm not a financial advisor. I am a financial investor, but I'm not an advisor. So I cannot tell you what to buy, when to buy, how to buy. I'm just explaining to you what I see on the charts and trying to help you understand a little bit of the psychology and a little bit of the telltale signs of Wyckoff accumulation by institutions. So there you have it. Thank you for watching. If you've watched this far, thank you so much. I appreciate your patience. Thank you for listening. Please click like, and we'll see you in the next video. Remember the first rule: never lose money. Second rule: make some money.